52. This despite joblessness surging to 8.1% in August, its highest rate yet since April this year. Compare that as well to joblessness figures back in July, which was at 6.9%. Current rating at 8.1% translates to around 3.88 million jobless Filipinos. Compare that to around 3.07 million jobless Pinoys back in July. According to the government, that increase in joblessness is quite expected given that stricter quarantine restrictions were imposed back then to stop the spread of the Delta variant. We'll try to give you more details later on that one. But another concerning thing here, you have the country's debt ballooning to 11.64 trillion pesos. That's also something that we are going to discuss with our guest, Security Bank Chief Economist Robert Dan Rosas, later on in the program. But one other thing that we have to keep an eye on, you have the country turning out to be the worst place to be in during this pandemic. That's according to Bloomberg's COVID resiliency report. Well, according to Matt Cabangon of AAA Equities, it's not really market moving news here. And with optimism evident with shares hovering still under 7,000 for 2 weeks now, there are high hopes, according to him, that fourth quarter will be a big vaccination quarter with more vaccines arriving in the country. But enough of that, let's zoom in on some particular stocks here. First one is FGen. After it sets a record, after its tender offer has been concluded, it rose as much as 6.6% earlier in the session, but pared back those gains to 4.6%. Still enough, though, to reach its highest price yet at 33 pesos and 95 centavos a piece. So what's the news here with FGen? Well, its investor, Philippine Clean Energy, completed its tender offer to acquire 3 to 5.7% of the electricity produced at 33 pesos a share, according to Carlos Temporal of AP Securities. This should reduce FGen's 18.7% float, allowing easier movement for the stock, even on smaller liquidity. But apart from FGen, you have one stock, in fact, outpacing FGen's gains for today. I'm talking about Semirara, which soared 10.4%. This over speculation that earnings will benefit from spiking coal prices, according to Carlos Temporal. Again, the coal producers' earnings will outperform given the trajectory of coal prices exceeding management expectations. Just to give you an idea, Semirara management is expecting coal to be priced in at $153 per MT in the third quarter before easing in the last quarter of the year. But actual figures showed it's already at $165 and will rise further, given that Semirara for today is now priced at 21 pesos a share, increasing by more than 10%. Here are other headlines we're keeping our eyes on. The palace said it's not surprised that the Philippines landed at the bottom of Bloomberg's COVID-19 resiliency ranking, as richer countries are getting more supplies of COVID-19 vaccines. In today's briefing, presidential spokesperson Harry Roque said they agree that the country is underperforming in terms of economic resilience, citing lockdowns that had to be implemented due to the emergence of the Delta variant. However, Roque noted that only 53 countries were included in the Bloomberg report, which means the Philippines' COVID-19 resilience is not the worst out of over 190 countries or territories in the world. Meanwhile, Economic Planning Secretary Carl Kendrick Chua believes that the Bloomberg report is still a work in progress, especially as the ranking takes policies in place into account. He explains that the Philippines is still slowly improving its policies to allow the economy to function normally as the pandemic drags on. The palace is also convinced that the new alert level system is resulting in improvements in the COVID-19 situation in NCR as the reproduction rate declines. In other news, the national government's total outstanding debt soared to a record 11.64 trillion pesos as of end August, as the country continues to raise more funds for its pandemic response. This is a 21% increase from the total debt stock recorded during the same period last year. The Treasury reports that the country's debt also increased month on month by more than 32 billion pesos from July due to higher borrowings from the domestic market. The agency notes that 70% of the debt was borrowed locally, while the remaining 30% was sourced externally. Now, despite the number of jobless Filipinos increasing last month, the country's economic managers insist that there are improvements in the labor market. In a joint statement, economic managers say the latest labor force survey shows that the government and the Filipinos are learning to better manage the risks brought by the pandemic. The officials believe that the higher unemployment rate of 8.1% has been expected due to stricter quarantine measures imposed amid the emergence of the Delta variant. But they stress that more people were still able to rejoin the workforce, with labor force participation increasing to a little over 63% in August from almost 60% in July. Improving job conditions also supposedly pulled down underemployment to 14.7% from the previous 20.9%. Economic managers reiterate the key to recovery remains to be the safe reopening of the economy, the limiting of restrictions to granular lockdowns, and the acceleration of the vaccination program. Okay, lots of economic data to digest today. Let's get right to it with Security Bank Assistant Vice President and Chief Economist Robert Dan Roses. Good afternoon, Sir Dan.
Good afternoon, Jess. Nice to see you again.
Nice to see you again, sir. So employment figures came in this morning. How should we read into these numbers? Joblessness increased during the height of the lockdowns back in August, but labor force participation at least still rising. How should we look into those?
Yeah, well, it was largely expected that there's going to be a jump. We've seen that in the past, whenever there was some sort of lockdown in place. So if you take a look at the data month on month, um, unemployment jumped to a 4-month high of 8.1%. So that translates to around 3.9 million in
Mhm.
August from 6.9% in July. This is attributed to the lockdowns. But month on month, employment rose by 2.6%. 2.6 million to 44.2 million, largely on the back of job recovery in agriculture and wholesale and retail trade.
Mhm.
The labor force also expanded by 7.5% month on month. That's around 48.1 million in August on growth in both unemployed and employed persons. So the way to look at it is that despite the lockdown, we're still seeing some green shoots in terms of employment uptake. No? Um,
Mhm.
like I mentioned earlier, that was largely expected because of the lockdowns, but at least the trajectory that is showing month on month, it could be some improvements on the back of, like what our economic manager said, Filipinos are learning to manage the risks more. So that translates to better employment outcomes as well.
Mhm. Okay, one other interesting thing from that labor report, you have underemployment also easing. Is it more of a case of no longer looking for additional jobs or a lack of choice?
Well, the underemployment rate has been seesawing since probably around 3 to 4 months ago. No,
Mhm.
so that's still indicative of how um, the labor market is being affected by the lockdowns and the pandemic as a whole. No? So um, the latest reading is good. No? So
Mhm.
that's something that we could take comfort in. But I don't expect that to be probably level or improving in the next couple of months. Now we have to contend with the uncertainties that we still have in the pandemic. No? But all in all, it's a welcome figure to see. No, that the underemployment rate is actually declining.
Okay, one other change, of course, from August to now is that Metro Manila is now under an alert level system, and we did get word that alert level 4 has been extended for a week. We're trying to confirm that at least is according to MMDA Chairman Benhur Avalos. We'll try to get more details on that one. But again, the enforcement of the alert level system here in NCR, how should that at least affect employment figures come September?
Well, with the pilot implementation of that GCQ plus granular lockdown scheme, now we're observing some improvement in the overall mobility data, which actually started around September 15. For the major regions that we track, upticks in mobility were seen. No, so workplace mobility, however, remain relatively flat, which is expected. But retail and recreation mobility showing an upward trend already for all the major regions. Um, Calabarzon and Central Luzon in particular, the retail footprint is approaching pre-pandemic mobility already. You know? So we're expecting some uptrend in the mobility. We're expecting it to continue with the government planning to probably loosen curbs after a week, hopefully. Um, NCR mobility for retail and recreation that's projected to actually shoot up slightly below or near the pre-pandemic index on the back of the holiday season. No? So there's something that we also saw last year. What's different from this year is probably there's more tendency for revenge spending, no, because of the buildup of savings as well and higher remittances that we're seeing. No? So yeah, probably a looser mobility curve. Mobility curbing will likely bode well for the fourth quarter GDP or bode yeah for the fourth quarter GDP as well.
Okay, now let's shift to a different topic now, Sir Dan. You have national debt ballooning to 11.6 trillion pesos. Is there an impending credit rating downgrade, and should we be worried?
Okay. The buildup in the debt stock that's expected as well because of all the borrowing that we needed for pandemic response. No? The downgrade that we heard from Fitch, Moody's, and also S&P, that's likely a warning from them for us to be able to probably get our acts together in terms of health spending and fiscal priorities as well. No? If that doesn't really translate to spending, no, relative to the borrowings that we've been doing, no, then we could probably expect a downgrade. But right now, the probability is probably 50-50. No? Like I said, it's a warning for us to probably get our acts together.
Should we find comfort in the fact that majority still of that debt stock is domestically sourced at around 70%?
Right. It's not as going to be as expensive in terms of repaying that debt. No? So I think the BTR is well on top of the situation in terms of the inflow and outflow of the debt stock, particularly the domestic borrowing. Like you said, it's around 70% of debts that we're seeing. So that's actually a good level to be in terms of the mix that we have.
Now, lastly, you have the Bloomberg Resiliency Ranking. If you try to look at that report, it seems as though the country is in the middle of a perfect storm from an economic standpoint. How deep is a pit we are in, and how do we get out of it?
Well, the NEDA themselves have projected a recovery of 10 years for us to be able to get back to the pre-pandemic trajectory, no? Meaning the steady 6%. No? Likely around 2023 or even 2024, we'll be seeing some growth translating to that number. No? But the trajectory, no? If we graph it, that could probably take 10 years. No? That's actually according to NEDA themselves. That's because of the investment potential that we have lost. No? So actually, we're not alone in that in the region. No? A lot has been affected, but probably it's going to depend really on how the fiscal and health response will be in the quarters and years ahead. No? So yeah, so we kind of agree with that assessment. It might take some time for us to get back on track, but with the legislations that we have in terms of attracting more foreign direct investments and some green shoots that we are seeing in the economy right now, no, the 10-year projection could probably be the maximum projection. It could probably be earlier for all we know.
Okay, at least for the near term. For the near term, can you give us your projection for growth this 2021?
Well, for 2021, we're expecting probably some rebound in the fourth quarter. It's traditionally a consumption
Mhm.
season. Right now, we have it pegged at around 5.1% year on year. No? There's a downward revision bias to it. That would depend on how, how our tracking ends up. But right now, we're seeing a few minutes ago, no, there was already a report that loan growth has already turned positive around 1.6%, I think. No, so that's another green shoot, and it's right up the 9 month lag that the BSP has said regarding the effects of the rate cuts, no, that they instituted in November. So that's a very good development as well. So that means there's capital expansion going on. We're also seeing some upticks already, upticks in terms of employment growth for several sectors. No, admittedly, it's imbalanced. No, some sectors will be left behind, particularly probably around accommodation and resort services. Uh, those tied up to tourism, no, but the loan growth or the capital expansion that we're seeing is actually a good sign that there's already some production potential going on. No? Yeah, so probably fourth quarter could be a very good quarter indeed. The recovery is hinged upon the fact uh, uh, that the fourth quarter will be much better than all the quarters all the in the past 4 to 5 quarters, and probably that could, if that materializes, now we will be seeing the trajectory of growth rebound already, especially since herd immunity could probably be reached by the second quarter of next year.
All right, let's see if those green shoots would indeed spell better growth for the remainder of the year. Thank you very much for your time this afternoon. Security Bank Chief Economist Robert Dan Roses.
Thank you.
And those are the biggest stories this trading day, September 30, 2021. Catch Business World Live again tomorrow, 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.